Coming off historic market moves Monday and Tuesday, investors wonder what is next. Monday, the largest decline for the Dow in history. Yesterday, the first day in history where the Dow was down 500 points at the opening bell, up 500 points when they ended the day. So what's next? Joe Krier with ACG Wealth here to help sort things out. Hey, Joe, good to have you here.
Hey, Bruce.
I don't know that anybody knows the answer, but if we had a crystal ball, what do you think is going to happen next?
Oh, wow. Geez. Short term, nobody knows. And anybody in the advice business who tells you they know, you need to go the other way. Long term, this economy is in pretty good shape, and there's a lot of factors that could make this a short-lived market shakeout.
I want to talk about what's going good in the economy in just a second, but first, I think we need some perspective because a lot of people sit back and, you know, they start to have a personal financial earthquake because they think 2008 all over again. But everything I read indicates this is not 2008.
That's right. You know, and in 2008, we had a situation where banks were rolling over and all of a sudden they were up at the precipice because they had made a bunch of bad loans. Well, the banks have made good mortgage loans for the last 8 years, and they're actually on quite solid footing. The fear is actually the opposite. Instead of worrying about an economy that's going down, people are worried that the economy heats up too much, and then the Federal Reserve has to start raising interest rates, and then things really get out of control. But we're not there yet.
And there are a couple of things that I think people need to understand. Usually when interest rates go up, the markets go down, but you also have computerized trading that played a big factor in what happened over the past couple of days.
Yeah, definitely. On Monday, there was one point where the Dow went down 3% in about 3 minutes. And whenever something like that happens, it's computerized trading. And the big deal there is that last year was one of the calmest years in history for the markets. And a lot of these computerized formulas, they're based on how much the market swings intraday, say for the previous 20 or 50 periods. And when the market's so calm, those trigger points get narrower and narrower so that when it has a big day, it just gets amplified and every computer starts jumping on the bandwagon. That still may not have played out. Could be a little crazy today and tomorrow still, but this thing will probably calm down in a few days.
And you got to look at the overall picture. There is good financial news. The U.S. economy is strong. The global economy is strong.
Definitely. And, you know, jobs report last Friday came in, 200,000 new jobs created. The unemployment rate's down to 4.1. But the big scare was that wages went up just a little bit. And I think that's a short-lived scare. It's good for wages to go up because people will go and spend more money, and that helps the economy. So it's, you know, is bad news, or is good news, or is good news, good news? People need to sort this out, and in the end, I think it'll be good news is good news.
So I started off asking you what's next. I'm going to ask you now, what do we do? And you know what, I've known you long enough, and you've been on the air long enough, that you've always said, look, when you look at investments, you take a long-term view.
Definitely, you know, and taking the long-term view has always worked. That's not a reason to just assume that it'll work. But when we see volatility like this, what you want to do is step back and say, all right, is the economy going up or down or sideways? And in this case, we have market volatility with an economy that is going up, both in the U.S. and abroad. And that's not a scenario where 2008 develops all over again.
So do we sit tight for now?
I would use this as an opportunity to take a look at your holdings. And in some cases, you can look at, let's say you own 6 or 7 things, and you have 5 that match the markets and 2 that did a lot worse than the markets. Those are your weakest links, and those are the things you should be looking to replace.
It's like a chess game.
It is to a certain extent, and when we have volatility like this, it kind of uncovers what's strong and what's weak out there.
And there could be some buying opportunities too, which will enhance your portfolio.
Yeah, and we'll see some leadership emerge out of this. It'll be interesting to see whether it's healthcare or tech stocks, but the new leaders are the ones that are likely to take us, you know, through the next 6 months even.
All righty. If you want more financial information and following the markets, you can do it on news4jax.com.